Michael, Rolf, and Sasha Bialick. No shows. Right. We will press on then. Gentlemen, please do introduce who you are, your company, and I hate to say it, what gives you a justification for sitting on this stage and talking about wallets? Off you go.
Okay, so, hi everybody. My name is Glazachev. I am CEO of Yandex.Money. And Yandex.Money is the biggest e-wallet company in Russia. We have over 60 million of registered accounts.
Sorry, 60 million?
Yes, 60.
60 million customers?
Yeah. Registered customers, yes. So, and that's one side of our business. Another side of our business, we're also the biggest PSP, servicing about 120,000 merchants. But I'm not going to speak about that part of the business, so I'm returning back to the wallet. Our USP is pretty much simple. We have three main pillars. First of all, we offer easy onboarding. And for example, compared with the bank, where you need to spend some time to open an account, you can download our app, register, and get a virtual card. We're also the principal member of Visa and MasterCard, so you can get a virtual card in a matter of minutes. Should you need a plastic card, we can also ship it worldwide in a few days, so have to wait about a bit for that. But otherwise than that, as I said, it's very easy onboarding. That's number one. Number two, we try to be smart in real time, and that means that we give our customers advice on how to spend. We provide real-time statistics on what they do and how best to use their money. We have a loyalty platform, and we issue points for specific actions, and we issue them also in real time. So when you spend, you get immediately your rewards, and you can use that rewards immediately for whatever you want to use. And our plan is to increase our AI capabilities and move from reactive smart to proactive smart, meaning that to anticipate what our customer needs and wants. And number three, USP pillar is that we're fun. For instance, last year we have launched the gaming platform. So inside our application, inside our web application, we now offer our customers to participate in, there were in the 80s text adventure games. So we have, trying to use that format with our clients. Just it's an adventure game. You follow the plot, you do some stuff, you receive more points for that. You can use them for whatever reasons you want to use them, for different rewards or for skipping some of the difficult quests. But in essence, it's a text quest. And 30% of our active customers are now on that platform. So that's amazing. That's actually, we're surprised ourselves. But that's what we are in a nutshell.
So what do your customers actually use your wallet for? Is it just gambling?
No, it's not. I didn't say gambling, it's gaming.
No, I just thought I'd ask the questions. Russians are a fairly known world to gamble, though, but...
Well, maybe, but majority actually, the major case, it's money transfer, top-ups, payments. In fact, even though that we're big, we're growing 50% year over year in transfers on mobile platforms. So that's pretty much a lot, and that's the majority of users, use cases.
Hi everyone, I'm Chiche, the co-founder and CEO at Lydia. I don't know how many people in this room are from France. Raise your hand. Okay, good. So there's a lot of people I need to convince Lydia exists. In France, a lot of people know it exists. We have 3 million users. It's growing 150,000 a month. We don't do no paid acquisition. And
so 3 million current customers, 50,000 month growth.
150,000 months.
150,000.
And it's just organic, which is nice from a financial point of view. And also, we started as a mobile payment app, but what really took off first was P2P. And Lydia came known as Venmo for France. And people actually do say in France, je te fais un Lydia, which means I Lydia you. So the name is used as a verb, which is pretty cool when you don't do no paid acquisition. We made it evolve, so now you can do all your daily payments with Lydia. You have a card, you have an account, you have contactless payment. You can basically do pretty much everything in terms of payment, shared through share account between multiple people and stuff like that. And we recently started a big evolution for Lydia from a mobile payment app into more of a super app for financial services. So we basically added a curated marketplace of third-party product that we are distributing through Lydia in a specific place called Le Marché, which means the market. Was not very creative, but it says what it is. And basically from there you can open a bank account, you can subscribe to your home insurance, you can have an instant loan, and all these are provided by partner. We're leveraging the data we have to provide with very smooth and frictionless onboarding onto this product.
So how much, this is effectively as a marketplace?
It is a curated marketplace indeed, yeah.
And how much of your income, let's look ahead a couple of years, you're obviously making commissions on those, that's the idea. How much of your income do you see being potentially derived from that sort of marketplace functionality as opposed to your own services? 20%, 30%?
Well, it's...
Not today, but in 2 or 3 years.
Well, let me tell you about today. We launched it 2 months ago, and it's already 25%.
25%?
To our surprise, I have to say. The goal we had in the business plan, what this part will represent like 50% or 55% 3 years down the road.
Yep.
But it's already 25%.
And do you think that's because customers are trusting the Lydia brand and therefore trusting the companies in your marketplace? Or what's driving them to go to your marketplace rather than, there's a lot of marketplaces out there.
Indeed. I guess there are a couple of things here. Trust is, of course, an immense factor. It's decisive for...
Hi, sorry.
You. It's going to cost you in beers.
Sorry, everyone.
So yeah, definitely trust is very, very important. I also believe that what made Lydia is really the user experience. And once again, here, if you look at the product, the user experience, onboarding experience is really amazing. Like when I say you have an instant loan, and it's provided by our partner bank Casino, which is a bank, actually. Well, in 10 to 15 seconds, you can have up to €1,000 delivered to your Lydia account, and you can spend it wherever you want.
Okay, I'm interested because
that you can't get anywhere.
Just at the right time, because we're talking about marketplaces. Yeah. So, and I've asked him how much of his revenue comes from his marketplace. He told us 25% already. So, Sacha, maybe you can explain your wallet, because not everyone may here know how the Curve wallet, because it's a different type of wallet, number one. And then the second question is, how important is your revenue today from your marketplace? Because in the first 3 months, he's generating 25% of his income from his marketplace.
So, sorry for being late, everyone. For those who don't know Curve, Curve built an over-the-top banking platform. The hypothesis we're working towards is that the world of money is very fragmented and it shows no signs of slowing down. It is accelerating. And we believe that the end game would be a convergence of the space, rebundling of distribution and manufacturing that is completely unbundled right now. The only question we had is that if the world of money will be rebundled, what would be that product? Would it be a better bank? And we early on understood that actually your bank is doing a great job. I'm not joking, we truly believe in that. Your bank is doing a great job keeping your money safe. And that's the only job of your bank. Why? Because I can do everything else your bank can do today without a banking license. And having a banking license and operating a bank costs a lot of money. The second thing we learned is that your money is everywhere and that's connected to the marketplace. Your money is with PayPal, debit cards, credit cards, different bank accounts, joint accounts, business accounts, lending, and so forth. So our job is not to change your behaviors, because if Apple can do it, who am I to do it? Nor to change the infrastructure. Our job, like Spotify's job was, is to first connect you to what you love and trust the most. So let's connect you to everything money. And the third thing we learned very early on is that it is not sufficient to have read access, just to see the data. We have to have actionable write access. So we have to get access to each one of your products and ability to write into them. And this is what we built as Curve. It's positioned to the customer as all your cards in one. That's the entry point. But as they come in, they can do a lot of magical stuff. For example, time travel. I can move transaction back in time to the right account even after a transaction has happened, and we patented it. Now, the reason we patented it, and now I'm entering into your question of marketplace, is because as you enter into the flow of banking, it is not sufficient anymore to come and propose you a new credit line or a new product from another partner. We have to produce that new product tailored to your needs at the right time and in the right experience. So what does it mean? I'll give you one example. As a user, I can go today to multiple products and services, from Klarna to pay an installment at a merchant, to cash flow and get a credit card for business, or Brex in the US gives me that as well. But that's a very traditional incumbent thinking. However, the way we think about the product is more like a personal CFO. So as a user, I've added all my, let's take this example of credit cards, I added all my cards. And now that we added all your cards, we see on each one of your credit cards how much persistent debt you have. What's the APR you're paying on each one of them? Are you paying the minimum amount or the full balance by the end of the month? And we can see very clearly that users have $3,000 balance standing on 3 different credit cards, and they're paying an average of 30% APR. The incumbent thinking is, I'm going to give you a loan or get a new credit card, and you're going to figure out how to pay back everything. Curve thinking is much more actionable. We'll be able to trigger a message to the customer and tell the customer, hey, today you're paying $3,000 for those 3 credit cards with 30% APR. If you will do a minimum payment of $300 a month, you will finish it within 18 months. We can allow you to pay $250 a month and finish within 12 months. Would you like to continue? Obviously, yes. I tap yes. Curve has write access. We credit back all the credit cards, generate a new loan, and deploy that immediately to the customer. This is the way a marketplace should work. So we can do it proprietary as Curve, and we can do it with partners who are great at providing credit and lending.
So how important is this business to you? You didn't answer the question. How important?
I answered the first question.
No. Yeah. You should know by now. I don't
now
know.
Did I know?
Yeah, you should know by now. How important is the marketplace to your overall business today compared
to... The way it is important a lot, especially in the very early days. And the way to think about it is, I'll take Amazon experience because most of us use Amazon, and not because I'm trying to position myself to Amazon. I'm not Jeff Bezos yet, but the thinking is the same. When Amazon started, they started by creating a marketplace. I own the distribution, I own the customer, I own the experience, and I will connect you to a marketplace of products and services. And this is very important because your money is everywhere.
So percentage-wise of your business income, roughly 10, 20, 50?
It's not significant.
Not significant?
Not significant.
Okay. You run a sort of marketplace as well. How important is it to your business?
Okay.
Yes, and I will ask the percentage.
Okay, so we have 2 approaches. For the merchant business, we have created the marketplace. And the reason we did that was not to capture significant percentage of revenue from this marketplace and returning back to you, it's like around maybe 5% of our revenue. But with the introduction of that, we wanted to capture the whole value chain for the merchant. And our main base consists of SME businesses. And for them, we offer registration of their company. We offer them to launch marketing campaign to attract new customers. We offer them to build their website. So it's beyond the payments. And the reason for this, we don't want to earn anything from that. We want the merchant to set up him as fast as possible and to make his life with us. By life, I mean like he's staying with us as long as possible. For the B2C side, for the wallet side, we chose a different approach. We partner with companies who provide services that we believe are complementary to what our core wallet provides. So it's not like a marketplace in terms of...
But it's a partnership with them.
It's partnerships. So we allow...
Do you make commissions?
Small, once again, it's not significant. For instance, we offer investments on the robo-advising in partnership with an established company. And it's not the big revenue stream we're getting from there, but we see that our clients who use these services, in terms of LTV value for us, they're maybe like 10 times
Okay.
bigger than our average client. So
Wow.
it's for us, it's the matter of client
Engagement.
engagement, attraction, and well, once again, he's staying with us as long as possible using our platform.
Okay.
But if you want to know some numbers on marketplaces, so you can look at companies like LendingTree in the US or Bankrate in the UK, compare the market, BGL and Money Supermarket. You can look at their traded companies, some of them, you can look at the reports and see how much money they're generating from marketplace. The biggest marketplace entries in the UK is insurance and mortgages. That's where the money goes. In fact, if you look at lending companies and mortgages and insurance, the one making most of the money is actually those marketplaces. When it comes to credit card affiliates, the marketplace in the UK is quite low. It's about 10 to 30 pounds per affiliate. That's because the interchange, the money you make on credit cards is not that high. However, when you go to across the pond to the US, you can go all the way up to 250, 300 pounds per card. And going back to finalize my thoughts, is when you have read-write access, we can get a Money Supermarket become just one business unit within Curve. And when we can not offer you, hey, Chase credit card is best for you, good luck. And now you need to do KYC and onboarding, but Chase credit card is great for you. Would you like it? Yes. Push provision a credit card, immediately activate it in your wallet, off you go. That's unique about where the marketplace will go. Curve hopefully will be the first one to do it, but this is where the market will go.
So you're saying rather than just offer the customer a marketplace where they can choose, to be proactive in offering them certain things, almost like a clear score model, and then enabling that to happen almost instantly.
Yeah, people don't have. I have hardly time to see my family and friends, so I have no time to think about my finances. And I'm an educated person with an MBA, and I still don't have a clue about how to compound, let alone the common man on the street. So we don't have the education or the headspace to do that, to go into a website, to research. You want someone trusted that will be able to look at the data, generate insight, and recommend you actionable insights. And your job is just to say yes or no. That's our view.
Yeah. I kind of disagree.
Good.
Just for the sake of it, actually.
David brought me here just to make that happen.
No, actually, you're right. It's difficult for people to understand what's happening in the financial services world. It's very complex. It's hidden. It's tough to get the information. We decided to take another path, but I certainly understand very well why you've chosen that one. I personally always feel very uncomfortable with people giving me an advice and selling me the product at the end, because I've always felt like it was a biased advice. True or not, it doesn't really matter, because that's what I'm feeling. When my bank guy calls me and says, Cyril, you know, I've got great news for you. I've looked into your money and blah, blah, blah. I think you can make a lot more. You should buy this product from us. And I'm like, oh. Funny, if you call me and you tell me, you know, you have the choice between 12 products, we've analyzed them, and that's exactly what you could get, and this one is certainly the best for you, and it's not from us, then I might feel more comfortable. But today, it's not what I see in all the apps that do recommendation. It's not what I see from the banks who do recommendation, whether by people or through whatever robot they want to use. So the action plan we've taken at Lydia is we will give you information and you do whatever you want with it, honestly. And we will provide you with products that we feel are good products. Eventually, we won't show them to you if we don't believe they're good for you, but we will show them to you, and we won't advise you to choose them. We'll make them available to you. We see ourselves as a marketplace, and you never seen Amazon pushing you product or sending you emails that you should buy this product because I see you like this. They do this analyze in the background. They show you a lot of product when you see one product, but they certainly don't push you advice. And so we decided to go that road.
So you're saying 2 points here. One is, how can I trust that the advice you give me and the actionable product is the right one? I think it's a UX structure. So if it's a no-brainer, it's a no-brainer, but it's a challenge. But you say, let's give them information and let them figure out themselves. Let's ask the audience a question. You're all educated, you're in finance, you know compounding. What is better? What is cheaper? $100 split into 2 installments of $55 every month, or $100 paid at 50% APR? Which one is cheaper? Write yourself a note. Let's take it a second. Do you know the answer? What is cheaper? $100 split into 2 installments of $55 every month, or $100 at 50% APR?
Paid back over what period?
2 months.
Okay. Put the
Right.
hands up.
Anyone wants to try? Simple compounding question, very small numbers. Yeah? The APR one is cheaper. That's because of the trick, not because you know. Do you know why? Do you can explain it why? Right? APR is calculated over a year. That's its internal rate of return. That's APR. And 55 per 2 installments, 100 over 2, is 103% APR. But for most of us, it sounds like 10%, right? Because I only pay 10 over. That's how our brain works. This is a very simple example that people doesn't have the ability to figure out.
Okay, but you said to me you partner rather than do it. Do you find a problem with do you validate your partners? Do you audit them? There's obviously a huge amount of trust there because you choose an individual partner for a certain thing rather than giving people the choice, and then you just let people choose. So you must have to do a lot of work from your side in terms of validating those partners.
Absolutely. I mean, the worst thing that you can do is to dump lots of products, whether they're relevant or non-relevant to your customers, and then try to upsell, cross-sell, and do all this crazy old-fashioned stuff. I mean, and we're very careful about that. So, for instance, I mentioned the robo-advising platform. It took us, I think, 1 year, and not because we're slow here, although I wish we could be faster, but it took us 1 year to work with the partner just to figure out the whole customer value proposition, how he should be interacting with the platform, what he gets at what step of the customer journey, etc., etc., etc. So we don't have much, like many partners. We partner in very specific areas, which we first test for relevancy, and and then we deploy. And we're very humble with new products to our customers. So we would never say, okay, we have this, and that. But instead, we prefer just to give people data about their spend, because I agree, and that was a great example, I think, about APR and installments. Data empowers people. If you say to a customer, look, this is, I mean, we have analyzed what you do, and this is how much you could save per month if you just, for instance, use our offers from merchants, and we would automatically give them to you when you spend on these merchants, because you do this anyways. I mean, and this data empowers people, and I mean, you didn't sell anything. You just showed your customer the data, and I think that's the way how to approach this. Be very humble and empower people.
I'd like to move on from this to a topic I think that's close to all three of your hearts, which is loyalty. You have a cashback program, you have loyalty stuff, no, in Yandex. I mean, how do you drive loyalty on customers? Is it a points make prizes type program? Is it cashback? How do you see the best way of driving loyalty and usage of products in your sort of wallet type products? I'm interested in hearing your views on this.
All right. So the best way to drive loyalty is build a great product. There's no hidden shortcuts. So most of our money is spent on developing a better product, look at the data, talk with customers, and iterate and iterate and iterate. The loyalty game at Curve, we see it very differently. Curve has a lot of unique stuff we can do. One of the unique stuff we can do, because we see on one end all your spend, and because of other stuff which are not public yet, we are able to close a loop between advertising or acquisition, retention, and churn that retailers wants to increase, to users' behavior. So what Curve does with the cashback is basically we finding means to help brands and retailers to increase retentions or acquire customers. What you see right now is version 1, where we're going and trying to paint you a picture of how the future may look like, so you get the full view of what we're aiming for. Today, retailers and brands has very limited digital online platforms to communicate, to acquire, retain, or bring back churned customers. Facebook, Google, Instagram, and so forth. And the way they're communicating is CPA, CPI, CPM. They have language they're using to compare between those platforms across it. However, when it comes to changing customer behavior in retails and branding, Facebook will not help me. What really would help me is when I spend money with the product itself. So what Curve is looking to do, it's going to take us time to get there, a lot of time, is allow merchants, retailers, brands to tap into our platform and says, I want to tap to all customers who shop at Sainsbury, and within 100 meters radius from where they live, there's also a Tesco. They, from habit, moving right to Sainsbury, but they can also form a new habit, move left. And I want to target those customers with a CPI of $10 per customer, and I want to tap to customers who didn't shop at Sainsbury, at Tesco, sorry, in the past 3 months, and send them something. It is not an ad, it is collateral that we as customers know to use and touch. It is stamp card, it is cashback, it is come to Tesco, spend $1,000 in the next 3 weeks and get 10% discount. And that allows us to connect the loop between retailers and brands to connect with customers based on real data and real behavioral change. So what you see right now is 0.1 version where we getting those retailers on top, learning what they need, and start to give value to the customers and see the behavioral change. But eventually, Curve on the loyalty business looking to compete directly with Facebook and Google. It's a longer vision. We have time together. We need scale to make it happen. But this is where we're going on the loyalty side.
Because your argument is you see total wallet spend, and therefore you can...
It's not the total. It's not only the total wallet spend. I see also where they live. I see also where they geographically with a mobile phone. I know who they are. I know if they're going to the Wiltons and Scott for lunch or eating at Pret a Manger. They're going to the Four Seasons or to Hilton, driving business or not. We have significant amount of information that helps us to give the user better value. We're not using the data. Our customer is not a product. We're not using the data without customer permission. But if the customer wants to get value, you can use the data as a currency of exchange.
Loyalty, sir.
Yeah, a couple topics indeed. First one is loyalty to our own brand and wallet. And I believe exactly like Sasha said, there is no shortcuts. Loyalty comes from great product, and I would extend that to great user experience across the board. So that also would include the KYC process. I would also include customer care process. So really, you can lose a customer at any point. You can have a great product, bad customer care. When there's a problem, you lose a customer. So it's really important that it's the entire customer experience that we're talking about here. And yes, I mean, you can only iterate and iterate and iterate until you find something that's really good. When it comes to loyalty, Lydia is a B2C company. We don't intend to use our customer data to become a B2B business. So we're not going to be doing what Curves want to do. Not that we believe it's not good. We believe it's a great business. It's just not, again, our decision and our path. With regard to loyalty, we believe, because we're very big romantic at Lydia, we believe brands should change the way they do it. The way they do it sucks. It's not by making your customer prisoners that you're going to win loyalty. It's by making them free, by respecting them, and by showing them you care. So what we truly believe is CLO, so card linked offer, and ALO even more, so account linked offer. Basically, you go, you shop somewhere, and without enrolling in any program, without any of the big issues and problem and horrible things that you have to do today to get some points or whatever, you don't even know what you're going to do with them afterwards, you'll get a true reward in cash on your balance with a little message saying, thank you for being a good customer. By being a good guy, you can make a big difference when you're a brand, rather than just shooting the 107 or the 20 years coupons of the day. I do not believe in this kind of loyalty from the 80s, 90s, even if you make it digital. And I believe that if we have enough, users, today we have 3 million, hopefully we'll go and get to 10 million by the end of 2021, we'll have enough power to convince brand that the way they should behave, and we'll be happy to be the destination for that disbursement of ALO or CLO.
Yandex, loyalty.
Well, there are several dimensions to loyalty. First, of course, there is the brand and product loyalty. And here we try to be very straightforward and simple with our customers. Like no small print. All our financial terms are included maybe in 7 or 8 lines. Like the wallet is free. Should you want a plastic card, it's $3, $10 for 3 years. So $3 a year, the equivalent of. Money transfers are free. ATM withdrawals are free, well, below certain monthly amount, etc., etc. So 7 simple lines. Second, we try to solve, you get a loyal customer when you're straightforward with him and when you solve his real problems, when he is in some difficult situation and you help him. For instance, several years ago, we have launched the purchase protection program, meaning that if you buy something online and use our wallet and something wrong happens, for whatever reasons beyond your control, we reimburse you fully. And when we were doing that, our CFO was asking me, like, how much this is going to cost us. And I said, you know what? This is not something that we're going to compromise on. Because when I read customers' reviews of those customers which ordered something, didn't get that, and then were reimbursed their money, I understand that this customer is with me, well, I don't know, if not for a lifetime, but for very, very long time. And even if that cost me money, I would make this money somewhere else. But here it's about loyalty. The same comes with support. So support must be 24/7, instant, online, via whatever channel your customer wants to communicate with you. Telephone, email, chat online. Chat is now, like when we launched it 2 years ago, now it's almost 50% of our customers prefer to use chat, but we also maintain other channels because for whatever reasons it might be easier or just more helpful with some customers. And then on top of that comes our own loyalty platform. And it is pretty much simple. There are 3 layers to it. So first, our customers choose the cashback that they want to receive from all the purchases. And we have 2 options. It's either flat cashback of 1% for like all purchases, or 5% for every 5th purchase. And the customer can choose. And do you know what's the most popular method? Like, can anybody guess in the audience? 1% flat or 5% for every 5th purchase?
This is an audience test, this panel, isn't it? Come on, hands up for the 1% flat. Come on, hands up. Anyone? No one?
5%?
5%? Everyone's gone for the 5%, right?
Okay, in effect, it's 1%. It was a surprise for me, but most people choose 1% flat because it's kind of simpler. They don't need to calculate. But the thing that we offer the choice, that the customer can choose, does play a huge part in the customer experience because people love choices, even though that they prefer just the simplest method. So on top of this flat cashback, as I said, we're the biggest PSPs, so we have lots of merchants on board. We provide merchant cashbacks. So like sometimes our merchants give 3, 5, up to 20% offers, and we match them with the customers, which obviously match some criteria. And even on top of that, we have this gamification platform, which I have mentioned earlier, where we also award our customers with points for completing various tasks that can be exchanged for whatever they can spend points on. So it's brand loyalty that consists of the product, of customer experience, of customer interaction, and then the loyalty platform where you just make specific rewards for your.
I was interested in hearing how you regard treating customers fairly and looking after the customer almost as part of a loyalty. And as a Chiche, when you first set up Curve, you almost did the same thing on your chargeback process there. Maybe you could explain. You have a very similar approach to treating customers almost overly fairly because you believe that's part of the loyalty.
Yeah, the loyalty when it comes to product, it's not just the technical product. It's, as the colleague said, it's all around from start the awareness of the brand down to the customer support of the brand and even referrals. And specifically what we've done with chargebacks is one of the things that exists in the UK, which is very nice, is the Section 79(5) protection. That basically allows you to have a protection when you use a credit card if you don't receive the goods. We really liked it, and we felt that it's needed everywhere we're operating, so we introduced Curve Customer Protection. We're able to do that because of a unique model. So whenever you spend money with Curve, which is a debit card, regardless of which card you're using behind, you will have up to £100,000 protection, which is significantly higher than Section 75. So you have full confidence. We taking care of you. If you didn't get the goods, if there was a fraud in your account, all you have to do is swipe chargeback or contact our CX, and we'll handle you. Because we owning the relationship now with the customer, we want to make sure you are feeling safe, that we're helping you control your money. Your money is not with us, it's with your bank that you trust because they're doing a good job, but we're helping you control those relationships because who wants to call their bank? That's the point there.
All right. It was interesting. We're running out of time here. It was interesting because at the beginning we talked around 60 million customers with Yandex. I think you said 3 million, but growing at 150,000 a month. We missed out on the Curve's numbers, but I'm sure he'll give them to us in a second. But it's interesting to me that when you look around Europe and many markets, even in Africa, the wallet market is highly fragmented, almost on a national basis in some respects. As a prediction now, looking slightly ahead a couple of years, do we think there will be some more consolidation in this? Or are we going to continue with some fairly nationalistic type solutions as we look globally around? Because, you know, Yandex, I haven't seen you going into even heavily into the Eastern European markets and doing, you know, trying to dominate those either yet. So, plans? Dominate the world?
You know, it's difficult. With us, you know, and why it's difficult, and I think the fragmentation exists not because of the products or because of the plans, but mostly because of various politics, rules and regulations, etc. So with Yandex.Money, it's our shareholders, there are two shareholders, Yandex and Sberbank. And Sberbank is a sanctioned company, which makes us sanctioned company. So, I mean, even that we wish, we could not go outside of Russia. Although we work with many multinational accounts selling some things or providing some products in Russia, but still we're Russian-based. So, but according to the your first question about market consolidation, I believe that if we take like specific geographies, which
we're going to have to hurry along here, running out of time. Quick forecast.
So Russia is already consolidated. There are like, besides Yandex.Money, 2 wallet companies which are more or less visible, and that's it.
Yeah, I don't know about a global wallet, but for sure there'll be consolidation.
You're going into Belgium, Netherlands?
Yeah, definitely. We're going across Europe. Don't have no intention outside of Europe, but we're definitely going to go across Europe, yeah.
Global domination, Sasha?
So I don't know much about the emerging markets. I'm not an expert there, but neither expert at all. But what I believe will be happening is that the convergence is inevitable. It will happen. However, it will not be just one player like you see with Amazon and Spotify. It will be 4 or 5 players across multiple regions. And the reason for that is that to become the rebundler in any market, there's a huge regulatory requirement for each market, which take time to authorize. And each market has different payment technologies, intra-bank networks, different networks. And to really rebundle, you have to connect to those networks. So it's really hard for a startup or any incumbent, if at all, to have multiple resources integrate into all the payment networks and across the globe and authorize across the globe at one go. Curve has this global domination aspiration, and we are operating in Europe right now and US later this year. These are the 2 key markets for the next 2 years, and hopefully then APAC. But with us, there's other smart founders with great companies that looking at the same vision, and they might choose other markets and execute well. And this is what will form in the next 5 to 10 years, those 4 or 5 big players. And another prediction, it will not be a bank.
There you have it. Thank you very much for a great set of panelists.